the Code to Cash podcast.
Pricing is not a billing problem. Pricing is a code problem. Pricing is a product.
Price point is really the last thing that actually even matters.
You need to have the most atomic unit of your product, not your product.
Hello, welcome back to the Code to Cash podcast. This is your host, Ajit Kuman. Today we have Ryan Iyengar. I am hoping I'm pronouncing your name correctly. We are co-members, executive members at Pavilion. Ryan, I've seen a lot of your posts on Pavilion, so I thought you'd be a great guest to have on today. I know you've recently started your own company, so I would love to give the audience a little bit overview of what you're doing right now, as well as your experience being head of marketing and president at other companies before this.
Yeah, of course. And good to chat with you. Thank you for having me on. I do like Pavilion quite a bit. I actually just taught a course there on demand gen in their CMO school. So
awesome.
that kind of speaks a little bit to the wealth of my experience. I've been in sales and marketing roles for the past, decade plus. But, some of my highlights, I'd say I was VP of marketing at ZipRecruiter for a very long time, led, employer acquisition and job seeker acquisition there. I spent time as a chief marketing officer of Health IQ, which is a health insurance company. And then most recently, my last corporate gig, I was chief revenue officer and then eventually president at Helium 10, which was a SMB-focused Amazon fulfillment by Amazon platform to help people sell more stuff on Amazon, essentially, to help Amazon sellers sell more stuff.
Makes sense.
So I left that job last year and decided to, go out on my own. So basically I just started a company. I'm a co-founder at Stack GTM. And our vision is basically that at every single one of these companies, I've mostly focused on the data, sales, marketing, strategy, all well and good. But a lot of decisions come down to, do we even have the data to make this decision or not? And at most companies, at any stage of maturity, they wish they had a little bit better data. Whether that's super early maturity, like, hey, we need to implement a CRM to keep our sales reps on track. Super late stage, hey, we need to improve our data models on lead scoring and automation and, gathering up insights from our call recording software or something like that. To me, all of these are data problems. And in fact, many of them are data engineering problems specifically. And I find sales and marketing teams mostly don't have data engineers. They have analysts or ops people or some folks that work an Excel model pretty well. But data engineering is a pretty well understood discipline at this point. Moving data from one place to another, ETL, extract, transform, load, things like that. So I'm just trying to bring that power to sales and marketing teams. So we do basically data engineering on the back end to hook up a bunch of systems and make sure they're all integrated.
So we are, like, the podcast is called Code to Cash. So that this, your story makes me very interested because you don't often hear many CMOs or CROs worrying about data engineering and data quality. Like, it's almost unheard of. So I'm just curious, when did you start having experiences? What sort of experiences did you have where you realized that this is a fundamental problem that is underpinning other issues?
I can actually harken back to, I think, the first search engine marketing job I ever had. I showed up and on day one they gave me a big SQL script and said, this is in the days basically early 2000s, when we weren't quite doing Google S bidding and stuff like that. So we basically had this giant SQL script that I didn't know SQL, I didn't know anything about SEM even, and they said, just make sure you run this once a week and that does the bid adjustments. And I was like, okay. And then I ran it, and long story short, I ended up taking down the database. So something about the script sort of errored out, and I didn't quite know what I was doing. And pretty soon I realized, like, when I looked at what the script was doing, it really wasn't that complex, right? Management is essentially, if you're at or below target, maybe you can raise your bids. If you're above target, maybe you should lower your bids. The logic is pretty simple, but the execution was very difficult. We had 100 million keywords. We had to sort of run this really massive script to be able to kind of do that at scale. I realized pretty fast, you have a lot of nulls in your data set. And like, what do you do with sparse data? And that was sort of the start of my introduction to, like, hey, if you want to do marketing at scale, it is kind of a data engineering problem. To do that. So I just sort of took that with me for the next little while. So I know it's not super common, but it's been my niche, my superpower. So I write a lot of SQL. I do a lot of sort of data transformations.
Got it.
It's key to me that anyone can translate something in Excel, and that'll be good enough for a lot of use cases. But if you want to do it automatically, if you want to do it at across millions of rows or even billions of rows worth of data, you can't really just dump that into an Excel file and figure out what to do.
So I would love to dive into that a little bit more. So if there is there's so many CROs who come from a traditional sales background, what sort of problem will they be encountering? And they may not even know that they may want to talk to you, or they have a data problem. So what sort of issues do they face because of a data issue or a data quality issue?
Yeah, so I'll talk about sort of the one that I don't think I've met a CRO that doesn't have this problem, myself included, which is the difference between our ARR and kind of deal tracking value, pipeline value. In other words, things that exist in your CRM, and then trying to match that against things that exist in your billing system. So usually your CRM is not your billing system source of truth. Maybe you issue invoices and your accounting team kind of figures that out. Maybe you have Stripe to process payments at scale more. But in either case, data starts to drift very rapidly. So if you have one client and you bill them 10 grand, it's pretty easy to keep track of what's going on. But now you have 10 clients, and actually one of them upgraded mid-cycle and one of them downgraded mid-cycle, and actually someone emailed me just like a random check, or whatever. I received a random check in the mail. What am I supposed to do with this thing? So the reality of running a business on sort of a billing and accounting perspective is often a slightly different view of how much money do we actually have, how much, recurring revenue do we actually have, what will happen in the future. And so the traditional sales background CRO is going to make a very strong case, and I totally hear the case, that your CRM should be a strong source of truth.
Okay.
It is my particular take on that says it's the source of truth in terms of data gathered from sales. I do not believe that it is your source of truth that you can run your business on, because it does not collect enough data from customers.
Okay.
And I think that's where you need billing system plus CRM to kind of speak the same language. So you close an opportunity, and that kicks off a process to issue an invoice. If at some point in that process the invoice changes or the customer upgrades or downgrades or something like that, if that doesn't feed back into your CRM is no longer a source of truth. And so my argument is not, hey, stop using CRM. It's actually feed that data back into the CRM, make sure your sales team has that if they need that, and more importantly, make sure your CRO and CFO are looking at a combined view of CRM plus accounting to kind of get that together. Because I think if the CRO goes to the CFO and says, I hit my targets this month because, of numbers that my people typed in, the CFO might very fairly say, no, you didn't, because I only made this much money in my bank account, at the end of the day, or whatever that is.
Makes sense. And that can also lead to the frustrated CROs, who does not have visibility into the data that the company is actually comping or
and then you end up
basing decisions on.
You end up in this weird path where the CRO may not know their sort of final numbers until you close the books on the month, but they need to know that before they close the month, because they're sort of still in action. They need, a timeline on days and weeks, not a timeline on weeks and months.
Makes sense.
And that's a big operational headache that I've seen at a million different scale-ups, startups, etc. And in my mind, that is a data engineering problem. It's just sales and finance don't usually use that language.
Right. Correct. This is very interesting, because not only because from a CRO perspective, in my day job, I'm always working on different pricing models, and between pricing models, the amount of revenue that gets recognized between a hypothetical model and something that is actually sold upfront, which a deal increases in value, how sales teams get comped, those are quite interdependent variables.
Yeah.
And one, if my sales team is not happy, then I can't sell. I can't get my hypothetical financial model to work.
Yep.
So definitely agree with the problem, and I haven't really seen a good solution yet right now. So would love to see how your company does. Definitely looking forward to it.
Part of the issue that I see is, a lot of software solutions exist in this space.
Yeah.
But I personally, I don't think we're at this place where you can fully automate this type of work. I think you need some humans, you need some smart folks that understand the business and the domain.
Yep.
And so, right now we're still kind of poking around at the development of a product like that. A lot of the easy stuff is automatable, copying data from one place to another, doing transformations. The thing that's not automatable is, what are you supposed to do? What's the strategy? And so that's where we come in to at least help with some of that, with some of our clients.
Makes sense. Ryan, I've seen you've been very active in the Pavilion community, helping people with their pricing questions. So I was wondering if you had an example from one of your previous companies where you wanted to share like a detailed example of any pricing strategy change you may have made. I would love to learn more from you.
Sure. I mean, one of the first questions that I ever ask, I think, in an interview process, if I'm going and working at a company, is who sets the price?
Right.
Because I feel like obviously the CEO, right? They have strong ownership, but delegated down from there, sometimes it's a CFO, sometimes it's the CRO, sometimes it's a joint responsibility. But as a kind of broad sales and marketer thinking across, I want to be involved in those conversations. So every company I've ever been a part of, I've tried to participate in the pricing conversation because I think it's the most powerful one a company has. Tactically, I could talk your ear off about a bunch of examples, but I feel like maybe the deepest one to dive into, because I spent the longest time there, was ZipRecruiter. So I got there really early, one of the first marketers on that team. And when I got there, our price was $59 for 3 job posts. And that was in 2013. This was incredibly low price in the market. We were very much early disruptor, trying to, position ourselves very much below market price. Other people would be $250 for 1 job post. For us, it was $60 for 3. So a great deal. That said, over my tenure there, we raised prices like 6 times probably. And every time we did it slightly differently, with like a slightly different hypothesis, slightly different process. One that I wanted to talk about was our method of, because our pricing was sort of a subscription model to start, but because it's job posting, oftentimes we'd have to run pricing that was, I think this is kind of what you're getting to, where you sometimes have more complex models versus simple models.
Right.
So as an example, it's not just, hey, let's test $59 versus $99. That was one of our first tests. Turns out $99 won on a kind of simple A/B test. So that was great. We moved to that. The next set of tests were like more complex. It was like, okay, now we're going to do 99 flat for everyone, but over here we're going to test that against a model that is price per application, sort of trying to test out that usage based, trying to test out the, and we had a bunch of different versions of this, things like, you get some applications bundled in, but you pay for the clicks above a certain amount, or some where it depends on which job title you post, like paying for a software engineer job sort of costs more to promote than paying for an admin assistant job because it's sort of higher demand, lower supply. So we tried, some of these complex models. And one of the things that I wanted to talk about here was the ability to tell which one was winning was slightly more difficult, because if you're not just doing SaaS, single price per month versus single price per month, then what is your variable that you're sort of optimizing for? Is it immediate conversion rate, like number of people that you get to pay at all out of pocket? Well, that's going to optimize for things that sort of lower initial price but raise future price. Are you optimizing for LTV and sort of, things that eventually we believe that this new pricing model will result in greater monetization of a certain group of customers? Well, then how long do you run your test for? Do you, if you have a 12-month LTV that you want to project, are you running a test for 12 months? And so a lot of our decisions around that were based around problems like this. I wanted to bring up a model that I thought was really useful, which is this statistical model called bootstrapping. So I'm not a statistician, so I've sort of had it explained to me. But the simple idea is a lot of people use like statistical tests like t-tests or your A/B testing methodology, where you have a bucket in here and a bucket in here, and you generate some error bars. But what I've found is those error bars don't work as well when you're measuring revenue per visitor or revenue per subscriber, because revenue is unbounded to the right. It's sort of zero bounded and then unbounded to the right. Conversion rate is sort of 0 to 1. And so, these sort of normal distributions within the 0 to 1 is kind of easy to use averages and easy to use distributions to understand. But like our problem at ZipRecruiter was, to some degree, our revenue averages were driven entirely by whales. And so we can sell a bunch of $99 products, but if we ever got someone in there that paid us $10,000, that was great. Like we could sort of, the existence of that person or non-existence of that person in a given bucket would determine the entire win of the test. And, early choice there was like, oh, just exclude those guys. Those are outliers. But over time, we realized, no, there's certain pricing models that encourage those outliers a little more often. And so we need to measure them. We need to not just throw them out of the data set. We need to understand which pricing engenders that type of behavior. And I found bootstrapping to be a useful way to do it. So bootstrapping, the simple idea is like you sort of resample from the exact same set of customers over and over again. So you collect your data and you put people in bucket A, you put them in bucket B.
Okay.
But instead of measuring the simple, average of bucket A and the simple average of bucket B, you resample from bucket A over and over again, including replacement, which is to say you might actually sort of pull the same customer twice. So if I have 100 customers in bucket A, and 98% of them didn't purchase, and one of them bought 99 and one of them bought 10,000. Okay, now I'm going to randomly sample sort of at even odds of that, and I'm going to get a different group of 100 people. And on average, that I'm going to pull 1 out of 100 a $98 person, and 1 out of 100 a $10,000 person. And so some of these distributions will have 10,000 in it, and some of them won't. And if you do enough of these kind of resamples, and then you compare the average of those, and then you resample the bucket B and you compare the average of those, it's sort of in my mind, a fairer way than just sort of saying, hey, we got lucky this time or we didn't. You can collect few numbers of data points, but still have a decent idea on on average, is this going to be a better bucket or not? So I know that's a bit of a ramble. Is that make sense? I think it's kind of.
I'm trying to just break it down a little bit. So originally, you were saying the methodology would be, if you were doing an A/B test, you would have the A and the B, and you would just do aggregate statistics on
average revenue per visitor in the bucket.
But the way the revenue comes in, it comes in over time. So the moment at which you may have pulled the numbers, they are not telling you any story, essentially, because the story is evolving over time. So you are trying to run the sample again and then merge the samples to an aggregate number over time.
It's sort of that. It's not as much about the capturing more samples over time. It's more about, we understand that we're going to have high variability of revenue per customer in this segment, and it's not going to be normally distributed. So I think that's what people make the mistake of in statistics, where they say, I'm going to use these statistical tests that sort of start from the premise that the underlying distribution is a normal distribution. And for a lot of things, a la revenue per visitor, that's not a normal distribution, especially usage-based pricing, things like that. And so that's what I'm sort of trying to share is if you're optimizing for that metric, which I think is the right metric to optimize for, by the way, not just simple conversion rate. You want to have revenue in there. I found this bootstrapping method to be a sort of, it's just a different way than people are used to talking about confidence intervals and t-tests and things like that. And I'm saying throw that out. Use a different piece of statistics that's sort of a little bit more formed for this particular type of analysis. That's in my experience anyway.
Makes sense. This is very interesting because most of my pricing work is limits to B2B, where our tests are very manual, and the very extent of even doing A/B testing is more like, well, we changed our pricing model completely for the whole company, and we're going to see what happens for the next 2 years.
Totally.
So this seems like a much more agile. Even the A/B testing seems to be much more agile than a bigger company.
That's fair. Yeah. Enterprise A/B testing is a different beast, a whole log for sure. So
what enables? I'm also very curious about the ability to do any testing. It probably requires some amount of, as you were mentioning, all these things about data engineering. What setup would enable you to even do any testing? People do. When you hear A/B testing, you just hear website analytics and optimization and so on.
Yep.
What stack or what did you need to have ready at ZipRecruiter to even do the A/B testing or do different tests for pricing?
Yeah, absolutely. And this is what formed the thesis of full Stack GTM, that it's not about buying one point solution that can flip your website back and forth. To run a real pricing test, you need deep understanding of final billing systems. You can't just measure, as an example, you can have an amplitude chart, or mix panel or something like that shows how many people clicked the buy button. But what I need to know is how many people clicked the buy button, actually completed the purchase, and didn't refund within 7 days. And you can sort of hack your way to an amplitude solution there, and send events for refunds and things like that. But it's not sort of designed for that type of analysis. And so my stack here is basically just data warehousing stack. Sales and marketing people don't often build their own data warehouses. Often that comes from product or engineering or a more centralized BI or analytics team. But in every company that I've been a part of, I've just fought to make marketing and sales participate in that warehouse in the same breath. So, in one area of the warehouse, you'll have your, let's say, website collection metrics, and you'll have a big table that says on this day or on this timestamp, this user got bucketed into this event. And maybe you collect that with segment, maybe you collect it with Mixpanel. And then over here, you have a different table that says on this day, this customer ID charged this amount, and then did they refund or not? And that's coming from the billing system. And joining those two together based on the customer ID, you need to make sure you have customer ID in both places. And this is where data engineering crops up.
Completely. Okay, I'm going to complicate things one level further. So now let's say you're doing a pricing change, and now you have a change management issue. So, a lot of these companies today are like trying to figure out what to do with inflation, or they change the metric completely, and then they have to communicate with their legacy customers. What have you found worked? I know we've given some advice to people about this. So how does a company execute a larger project, right? Let's say they're completely changing their pricing metric altogether. What do they need to understand before they proceed with such an initiative?
Yeah, a lot of folks that have cropped up and I've given some advice on, they are doing some major shifts like this. Like we want to shift to usage-based or something like that from flat fee. And in my mind, you have to split that. You have to split that up a little bit. I've never really seen this work super well with just sort of, before no one knows about it, and tomorrow everyone knows about it, and it just sort of goes off. Like you split it up into chunks and phases and rollouts. It's a major initiative, and it's a high risk initiative because there's, potentially maybe you've run some tests to validate this is a good idea, but there's nothing like testing in production to see if it truly works, right? If your whole customers are in there. So the way I like to split it off is basically starting with new customers. Anything that I'm going to be doing as a major shift, I start with new customers first. Those are people that we didn't already have an existing relationship with. They don't know one way or the other. And for a lot of people that don't publish pricing, it's sort of even easier to do this type of work. But even for those who do publish pricing, I find it's not that logistically difficult to just sort of publish new pricing on the website, and therefore anyone who sort of goes through your funnel, they will only see the new pricing. And then once you've kind of determined that it works for new cohorts, you didn't tank conversion rate, that you didn't kind of totally confuse people in the demo process on like how much are they even going to pay at the end of the day, then you start addressing the legacy problem. And this is, I think, what people really struggle with. The way that I like to think about it is you don't have to address the legacy problem. Like a lot of companies that are in the business of switching their pricing completely, I take it for granted they're an early stage business. Like if you're a late stage business you've already gotten all your market share, you're sort of well established in the market, it's unlikely you're going to be totally kind of changing your business model on a whim like this. But if you're still early in your process, you're kind of discovering product market fit, maybe you just launched some new products and you want to reposition as a bundle versus a point solution. These are things that allow you to sort of say, I'm going to change on new. And it's my personal opinion that if you're going to acquire more customers in the next year than you've ever had in your lifetime, why bother messing with your legacy customers, basically? The opportunity is not there. I think the only reason to go mess with your legacy customers is if, one, they're unprofitable and you needed to do this pricing change because otherwise you have to kick them off, basically. They're overutilizing an unlimited plan or something like that. Or two, if you believe that you won't be acquiring many more customers in the future and this existing customer base is sort of all you got and you have to go into them for your future growth and ARPA growth. I find many startups don't have to do that. And in the times that I've run tests like that, that's the hardest thing to do. Like someone has signed up with an existing price, there's a compact there and the contract potentially even, and you have to go back to them and say, hey, terms have changed. You can win those deals for sure. You can go raise prices on existing customers, but you will lose some. You'll burn a little bit of brand equity. It's not a recurring growth. It's a one-time growth, realistically. Unless you're going to go back to them again and raise the price again. And like maybe that's some people's business models, but I don't know. I haven't seen that in my experience.
I don't really know where this impetus comes from, to be honest, myself. I've been responsible for this execution as a B2B product marketing leader, and this used to come up like, hey, we have to talk to investors, maybe we will IPO, and everybody just needs to be on the new plans. And I used to ask why.
Yeah.
I don't know
Why?
why. Why can't they just keep paying what they're paying and us like don't stir don't stir the honeybees.
Yeah, I mean, I know the reason why, right?
Okay.
Like we both know the reason why. It's because it's you get 2% more margin or
Yeah,
whatever
yeah.
it is, right? Like
Yeah.
it is a financially good move often to do this sort of. I find though it's one of those financially good moves that is not repeatable usually.
Yeah.
So it's a one-time boost, and it's if we need to squeeze that lever, we squeeze it. I get it. Whether your board wants to or your CEO wants to, whether or not it's a good idea. But thinking purely as the pricing practitioner, thinking purely as the person responsible to go do it.
Right.
I do my best to kind of tackle all of those challenges first before attacking legacy customers.
Right. Makes sense. Also, moving a little bit more to like the organizational dynamics in a company. So you mentioned at the start that there are many different people who own pricing, and then I guess pricing is sort of a Venn diagram within like a larger monetization piece. So if you were to advise other newer founders in the space, how would you recommend would be the best structure for them to assign these responsibilities? And what would they need to know beforehand?
That's a difficult question, because I can talk about, I guess, what I would advise, what I have advised people, when early stage founders come to me and ask me these questions about pricing. I guess the thing that I say most often to them is pricing is a CEO function. Like that's my simple heuristic here, which is especially early stage.
Yeah.
You can ask your salesperson what the most optimal price is, and like sometimes they're going to be able to figure out. You can ask your CFO, sometimes they'll be able to figure it out. You can ask your CMO, chief product officer, whatever. Like you can put it in these departments if you really are totally hopeless. But like my gut tells me most founders have a real good sense of where the value in their product lies. Which is, step one to pricing correctly. They have a good sense of their customers' feedback. Like, are customers complaining all the time, or are they, saying, "Wow, what a screaming deal"? They have sort of a sense of the order of magnitude there. Now, the logistics of setting pricing, sure, you're going to have to pick basically your most operationally competent group, and sometimes that's finance, sometimes that's sales, sometimes that's rev ops, whatever it is. But someone eventually has to basically say, "This is the price," and some people are going to be happy, some people are going to be unhappy. And you're going to have a whole host of people in that conversation. You're going to have investors. You're going to have your executive team. You're going to have your individual sales reps, and of course, you're going to have your customers. And I can think of no better person than the CEO to balance exactly all those groups. And so a lot of times I think it comes down to, like you said, sometimes enterprise pricing, especially, is like, hey, we're just going with this now. Like, it's not like a science, right? You're not necessarily doing this perfect A/B testing where you're gathering all this data. And, I've been privileged to work at B2B companies that have large amounts of data. And, you can run some tests like this. If you're running, you sign up 2 customers a month, you can't really A/B test that. You just have to kind of try it out. And Jason Lemkin, I think, has a good post about this where he talks about, from SaaSter, he talks about, what's the way to close a $100,000 deal? And it's sort of, well, first you close a $20,000 deal, and then the next customer you say $30,000, and the next customer you say $40,000. Next customer, it's iterative, right? And that to me speaks to the philosophy that I try to bring to founders, which is at the end of the day, it's really not that complex. It's a simple conversation, it's a simple negotiation. Given every single customer will have a little bit different needs. You just have to pick one. And clarity of pricing is sometimes a value. So that people, I think, fail to scale their businesses sometimes when they have this ultra customized, ultra unique, fully tweaked enterprise pricing versus something that all the businesses that have truly scaled, especially in B2B, some component of predictability and consistency, and that's why SaaS has taken over, because it's as a buyer of many software platforms. I like to know what I'm going to pay. That's just a realistic expectation, right? So
that's a good point. Actually, that's a good segue into just your general thoughts. We've touched upon usage-based pricing broadly, but there are, even as I found out, like usage-based pricing has a lot of below the line sort of small print. It's pretty much a fad nowadays, but okay, maybe I'm leading the witness. Curious to hear what your thoughts are, right? Because you just mentioned about predictability. What have you found in your sort of dabbling with usage-based pricing? What do people need to know about it?
Yeah, so I think it can be a force for increased monetization can be a force for sort of net revenue retention growth and positive net revenue retention as an example. So you start someone low and they eventually, embed themselves in your product over and over again and later start monetizing. In my opinion, though, I think we are living through the downsides of that model. The past 5 years, let's say, it was a big fad to say, move to usage and it's all upside, right? You can get exactly what you have today and you can get positive net revenue retention out of some customers that you wouldn't have otherwise gotten. Today, in a sort of down macro environment where people are looking for cost improvements, where people are, going and looking for OpEx optimizations, usage-based pricing is in my mind, optimization number one. I can go log into my Snowflake and lower my Snowflake bill by a bunch tomorrow. By just looking at, hey, why am I processing all this data that no one's using? Before, in a growth-based environment, I'm like, why am I doing that? Well, for insurance. Maybe someone wants to use it later, and of course, I'll just tag all of my data and bring in all of my records, and why not issue all of my users to a license? But in a cost-constrained environment, I think there's a double-edged sword to usage-based and to user-based and user seat licensing. Anything with that kind of dynamic component can be optimized down. The way that I think about it, though, is I really don't think that makes the model good or bad or anything like that. I think there's just sort of time granularity to it. To some degree, those usage-based tools could have also had flat fee pricing, and their flat fee they could work out to the same average ARPA, basically. If you took your usage base and you divide how much revenue you get by all your customers, you could just charge that average amount. Now, pricing optimization-wise, sure, the people are going to start getting good deals and people are going to start getting over monetized. But that's kind of how subscription bundling works anyway. There's always some, tweak there. It is my personal tactical advice right now to say, I wouldn't over optimize to the current cost environment and say we need to pivot pricing to protect our net revenue retention and hope to not see declines. Because that type of move might cause cancels rather than declines, and so a decline is always better than a cancel,
Makes sense.
or a contraction. But I think founders, CFOs for sure, and pricing operators often get stuck up in the tactical of the model, and thinking as a buyer and as someone that has set prices many times. It's never the model that makes the difference. It's always the value. It's always price to value. That's all that matters. Right? I can pay on usage base. I can pay on flat fee. I can pay per whatever percentage of revenue. It doesn't matter. All that matters is my product more valuable than the price that I'm paying net? And I can tell you about this time I negotiated price with a platform that was charging a percentage of ad spend as a marketer. I sort of laughed at them and said you provide no value as a percentage of my spend, right? It was a data processing vendor, right. More zeros in the columns don't mean you're doing more work, And they were like, no, but that's our model. I was like, okay, fine, I'll buy. I need your product, and it's a valuable product. And right now, I'm not spending that much money. I'm just letting you know, in the future, when my marketing spend goes up, I'm canceling because you won't be providing enough value. You think you have a model that will increase monetization as time goes on. I'm trying to tell you it won't, because that's not how your value is set, And so I did. We bought them for a while, and then our marketing spend grew, and then I canceled.
And that's so counterintuitive for them.
Yeah, because they're like, well, the buying signal means we have a happy customer, right? And look at them; we're growing ARPA, and then it sort of grows, and then it goes to zero, and it's like, well,
makes sense. That was already a lot of great information, Ryan. Thank you so much. Is there anything you would like to cover that I may not have touched upon?
Yeah, I guess there's a big debate out in the world, and I don't think this is a solvable debate, but I feel like I want to weigh in on it. Yeah, which is showing prices. Should you show prices, especially in B2B?
Yes,
especially in
that's
SaaS?
a very, very, very controversial question.
Yeah, and I think the reality is there's no one winner of that particular debate. It depends on the company. But I do feel like sharing my experience on it. In one company, we ended up hiding prices, and it helped quite a bit. And that was for several reasons, but the main one was because we wanted to start individualizing prices a little more, kind of discriminating and kind of zeroing in on certain segments and saying, hey, you're buying this thing, that's a more expensive thing than the other thing. It's at one price. At another company, I worked at Helium 10 as an example most recently. Prices are still public, and they, most likely will continue to be public, and are the same for anonymous visitors and logged in visitors and all that stuff. I feel like just weighing in on it by basically saying that it is the default presumption for most businesses to show the price. I think that's where most businesses should start, and I think you have to make a strong case on why you should hide them, and I think that case can be made pretty easily. It helps our sales conversations. It helps us. If our true price matrix is 20 by 20, like there's no way to kind of truly show that on a simple web page. So there's some arguments to be made, but I do think that's the right way that I've thought about it from, when I jump into a business. I'm not starting dogmatically of we have to show or we have to hide. I just start with by default show if you can. And then if the case is made that we increase conversion rate, we increase monetization, we increase user clarity, whatever it is, that then maybe you hide it. But I find most businesses I talk to don't start that. I feel like they start the other way. They start by default hide, and then if there's if it increases, maybe show. And I just disagree with that.
Definitely with the enterprise SaaS that happens because many people just do such a bad job with their packaging that they are offering the same, like, and I can't tell you the name of this company. I'm too close to them right now. After some time I might, but they have the same product and they sell it more expensive to quote unquote enterprise. It's the same product for another segment, and they have these price lists, but if the customer found out that they're just giving the same product for different prices, they'd be pretty upset. And that happened to us at Narvar, where we had different packages, but as soon as the customer found out that there was a cheaper one, the deal suddenly started to collapse, and we had to decide, like, okay, we're not going to publish. It just overburdens the sales team too much. But at the same time, if it was a different product, like, we're talking on this Riverside app, like for apps like this, of course, you just want to buy and start using. You don't want to have a negotiation. So
yeah, exactly. It makes sense that enterprise is a little more custom, and you do need that negotiability. But I find even in those places, I often, as a buyer, I still want to know organizationally, like order of magnitude. Am I talking 4 figures, 5 figures, 6 figures, 7 figures? Like what are we talking there? And that's.
For sure.
I'll go take a sales demo sometimes just to get the order of magnitude.
Yes.
And I think if your buyers are doing that, maybe you could do a little better job sort of positioning and packaging so that they understand it.
Makes sense. Yep. Agreed. All right. Thank you, sir. Appreciate your spending time with me. Is there how can people find you? How can people learn more about Full Stack GTM?
Yeah. So we have a website, fullstackgtm.com. You can see a little bit more of what we do. I'm on LinkedIn, pretty active there. My email is ryan@fullstackgtm.com. Feel free, reach out. And I'm also pretty active in a bunch of different Slack communities. You mentioned Pavilion. There's a couple other RevOps communities, things like that I've been diving into, and doing my best to just kind of add some value and learn what people's challenges are, things like that. It's been pretty fun to realize how common lots of pain points are, lots of challenges are, and I think everyone out there, from pricing folks to sales optimizers to CMOs, they're all kind of doing the same thing, which is what can we do tomorrow that will increase our run rate? And I love doing that. That's what I wake up every day and want to do for businesses. So I'm blessed to be in a place where I get to do that for clients.
Awesome. Thank you so much, Ryan. Really appreciate you having been on. This is, always great to deep dive and learn something new. Definitely learned something new about bootstrapping today and all the other stories that you mentioned as well. So appreciate your time.
Of course. Yeah. Thanks for having me on, Ajit.